Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we have an assortment of Tesla news to go through. We've got a downgrade on Tesla stock, an update on Tesla Powerwalls, a report on BYD and Tesla's partnership on batteries, and more. All right, looking at the stock, Tesla today up 0.6%, closing at $174.48, while the Nasdaq up almost 0.5%. So decent start to the week, all things considered, with the macro news that we talked about on Friday, which was of course the collapse of Silicon Valley Bank. Signature Bank this weekend joining that collapse, the third biggest bank failure in US history. The Fed, though, on Sunday releasing an update saying that all depositors at both of these banks will have access to all of their money, all of their deposited money, even above the $250,000 insured limit beginning today. So a backstop coming for those depositors. Hopefully that minimizes any disruption. Hopefully that minimizes further panic for deposits at other banks. Obviously, bank runs can quickly degrade things, so the Fed quickly stepping in here, hopefully making that situation much improved. I think probably the right thing to do. Very important to know that this is the depositors that are being backstopped. It's not a bailout for investors in these banks or anything like that. So they talk about shareholders, certain unsecured debt holders not being protected, senior management also being removed. So consequences, for the investors, consequences for management. But for the depositors, like we've talked about, a lot of startups, a lot of venture capital money with these banks. Hopefully that doesn't cause a collapse of a lot of those companies. That being said, even with this backstop, this has still affected rate expectations. So we talked about this going into last week, and here we can see that the CME Group FedWatch tool is now putting a 35% chance on no increase at all. So this has dropped significantly from a week ago where we had a 35% chance almost of a 50 basis point increase, now favoring either no increase or a 25 basis point increase. That's at 65% in terms of the implied expectations. If we go out to the May meeting, then sort of similar change here. There's actually a 10% chance implied expectation that we don't see an increase in March or in May. So pretty interesting to see that those changes with the big banking news that we've heard over the last few days. And we'll see next week when we get an update on that. As for Tesla, don't want to labor too much on the macro stuff since we talked more about that last week. But as for Tesla, we did see a couple of SEC filings drop in the last few days. So just wanted to quickly go through those. First one here, a Form 4, always a little bit ire raising, I guess. And this is from Elon, but not Elon selling, Elon actually acquiring. That's what these A's mean here. So Elon acquiring 10,500 shares. These are stock options that he has exercised. Kind of interestingly, the data here shows that, or the description here shows that this option was awarded as part of Tesla's company-wide patent incentive program. So Elon, as a part of that program, earning some stock here back from, I think, 2013 originally. So obviously those have increased significantly in value for Elon still, a relatively small amount of shares. Normally when shares like this are exercised, a certain portion is withheld or rather sold at the same time to cover taxes. Elon not doing that in this case, just acquiring all those shares and holding it. But again, I think it's only $1.8 million in that ballpark. So for Elon paying taxes on that, which does count as income, the difference between the exercise price, which is very close to zero here, and the exercise price is income tax. So Elon would just be paying those taxes versus selling. So good to see that. I think Elon probably trying to hold true on his promise of not selling shares this year. We also had a Form 5. This was just an update on an administration error for the Elon Musk Foundation or the Musk Foundation shares that we had talked about probably back in February. So just an update on a share count error that they'd had there. Then it was also Form 13G that was also just correcting another issue. So nothing too major here. This was about 15 shares. This one a little bit more significant, but again, probably nothing too concerning in any of those three filings that we got in the last few days. All right, next we've got an update on Tesla stock, I guess analyst coverage of Tesla stock, but Wolfe Research, Rod Lashy, has downgraded Tesla stock to peer perform from outperform. I believe previously they had a $185 price target on the stock. They, I think, have removed their price target now, but downgrading it basically on macro concerns, saying Tesla has already had to cut prices quite a bit more than we expected, and we worry that the macro challenges are intensifying in ways that could disproportionately affect US EV makers. So it's definitely a valid concern. We've been talking a lot about the macro over the last year for sure. Definitely something to keep an eye on, but there could be sort of unintended benefits here when we talk about interest rates and expectations there. Obviously, rates influence financing rates for cars. So if those rates pause a little bit more quickly because of what's happened here with the banks, could actually end up being a little bit beneficial for customers looking to finance vehicles. So there can be, different ways that things play out. Obviously, we're not in the clear yet with everything that's transpired with the banks, but it'll just be kind of interesting to see how this plays out. But they are concerned, just saying that recent events further deepen the uncertainty that they have in the tech sector, startups, financial institutions, and many non-tech California businesses. So basically nothing major to do with Tesla other than the price cuts, which we have talked about before, and they have mentioned before, but mostly downgrading on macro there. All right, so moving on from that, we do have an update on, or I guess a report rather. This is coming from South Korea. Report on BYD's batteries and Tesla's involvement there. This is a story that we've talked about over the last probably 12 to 18 months or so. Not ever really solid reporting on this, I would say. It's in the supply chain, so sometimes a little bit more difficult to get news. But the report had been that Tesla was working with BYD using their BYD Blade batteries, and I believe that those were supposed to be used at Giga Berlin. But again, we've never really had great confirmation of that. This article says that Tesla has been using 10 gigawatt hours of batteries from BYD, but now they're reporting that that is no longer going to be the case. Tesla apparently deciding to no longer be using BYD batteries. The article here does mention, and I saw this get picked up on Twitter a lot, that this is due to quality issues arising from a series of fire accidents of BYD LFP batteries. But if we look further in the report, I'm not sure if that's necessarily something that's been confirmed or if more of that is just being, if that's more of just speculation being sort of layered into the article. They do quote someone, a source from the battery industry here, saying that contrary to BYD's explanation, as accidents became more frequent, Tesla had no reason to use BYD batteries. It seems to be the reason for it. They're talking about the safety. So it seems to be the reason for it. Obviously, that's a speculative sort of phrase there, and that gets sort of mentioned up here as fact. So before we start spreading, tweets and things like that about BYD batteries being prone to fires, without any sort of statistics or more confirmation here about that being the reason, I would be hesitant to share that. I would imagine that part of Tesla's decision here probably has to do with BYD and them being close competition for Tesla in China, especially as Tesla starts to, with the price cuts, move a little bit lower into the price ranges that BYD has more played in. So could be safety related, as is speculated here in the article. Just want to make that clear that does, to me at least, sound a little bit more like speculation. All right, moving on, we've got an update on the Powerwall. Tesla is now saying that the Powerwall is available with and without solar in select US markets. They say that for those markets where it's not yet offered, that the people in those markets should place a reservation, and Tesla will notify those customers when it does become available. But this has been probably the case for probably 18 months or so. So good to see this now being offered from Tesla. I know a lot of customers are going to be excited about that. Probably means good things both for Tesla's supply of batteries, which they've been seemingly more excited about, less constrained on in the energy business lately. Probably a good sign there. And then also for chips too. Tesla has talked a lot about how they just had to rededicate semiconductors from Powerwall and their energy products over to the car business during 2022. So with both of those things hopefully becoming a little bit less constraining on Tesla, more opportunity now to ramp up the energy business. And I think that's part of what we're seeing here. So hopefully we can see Powerwall numbers increase pretty significantly. Tesla doesn't publish those individually, but sometimes we get updates on that, and we'll keep an eye out for any more on that. We've also got an update here from Tesla on their vehicle safety report. So probably the most interesting part of this is their Autopilot statistics, where they publish number of miles per accident. So usually this is in the 4 to 5 million range. You can see a graphical representation here of Q4. It is down a little bit from Q3 safety, but this is a seasonal type of item. You can see this same sort of trend historically. If you look for Q3 to Q4 last year, also a big drop off. So the best way to look at this is year over year for the same quarter, or to look at the trailing 12 months. So Tesla presenting it in an easier way to look year over year. This year, for vehicles that were on Autopilot, there was one crash for every 4.85 million miles driven. Obviously, that's a lot more than vehicles without Autopilot on, but it's not a fair comparison set. because you're traveling in different use cases in both. Nevertheless, safer than last year in Q4, where there was one crash on Autopilot every 4.35 miles. So Tesla also just shared at Investor Day some statistics on FSD beta specifically. So we'll have to go back and look at that. I think the statistic might have been a little bit different in terms of how it was presented, but we may be able to compare that a little bit to some of what Tesla has published here. But still good to see this improving over trailing 12 months and year over year. Next, we've just got a quick update on the Model S Plaid. We've got a report here from Sebastian Vettel, who has shared a YouTube video of him driving a Plaid around a track. He says that he is one of the first to receive the carbon ceramic brake kit from Tesla directly, and that with the ceramic brake kit, he has been able to achieve a speed over or around 350 kilometers per hour, which would be over 200 miles per hour, which is what Tesla lists the top speed at for the Plaid on the spec sheet. And it does note that, of course, it's when equipped with paid hardware upgrades. Ceramic braking kit is a $20,000 upgrade in the Tesla shop here in the United States. Tesla says that this is available early 2023. So with this, it sounds like in track mode with the ceramic braking kit, this person at least, hopefully that is the case for everybody, but this person at least claiming to reach this top speed, 350 kilometers per hour, again, 217 miles per hour. So awesome to see that. Hopefully as more of these kits go out, we'll get a little bit more firm updates on exactly how that is all structured. Moving on from Tesla news, we do have a couple of updates outside of Tesla in the industry. This one, an interesting one for Volkswagen, kind of a tale of two headlines here. This was back in January. VW talking about Tesla's price cuts for EVs. Oliver Bloom saying that Volkswagen would not be matching that strategy. And yet here we have price cuts, pretty significant price cuts on Volkswagen ID series in China. So this is down by as much as 19%. Looks like the discount here is 40,000 RMB or about 5,800 USD on the ID series. So pretty significant price cuts from Volkswagen. This is on top of what we had talked about with BYD adding some discounts. We've seen similar from BMW, not that that's necessarily worth mentioning all that much, but and then Ford Mustang Mach-E has also dropped their prices in China as well. And then, yeah, same story there with the Toyota BZ4X. But as we can see, a lot of price cuts in China. We've talked about just the difficulty in the industry so far, and we'll get a little bit more information on that, or I guess a little bit clearer information on that as we wrap up the quarter, and we can kind of get it clean quarter over quarter comparisons, but definitely a tougher market in China at the moment. We also have an update from Rivian. Wall Street Journal today reporting that Rivian and Amazon are in talks to potentially remove the exclusivity clause in their electric vehicle delivery van contract. Remember, that was for 100,000 vans by 2030, generally about 10,000 per year. But apparently Amazon had come in on the lower end of that, expecting about 10,000 vans this year. Sounds like Rivian may be expecting more. And now Rivian seeking to potentially end that exclusivity agreement, be able to supply these vans elsewhere. So kind of interesting. Sounds like it is sort of Rivian led in terms of wanting that exclusivity ended, which probably bodes well for Rivian production, but wouldn't necessarily be what I would have guessed with where Rivian is at right now and the guidance that they've given. Sorry, mouth got a little dry there. The guidance that they have given for the rest of the year, for the rest of the year. So interesting to see if anything comes of that and if Rivian can start to supply those to other companies as well. And then just a quick update here on Starlink. Michael Sheets reporting on some comments made by a Starlink or SpaceX vice president, now commenting that Starlink has well over 1 million users. Previously, the update had been that they had crossed 1 million, so well over, suggests continued good progress. Probably most interesting, they're building 6 next generation satellites per day and thousands of user terminals each day as well. So if you look at over 1 million users, you say thousands each day. And if you say thousands is maybe 2,500 at minimum, annualize that out, that would be almost 1 million terminals per year. So it looks like SpaceX could be on track to, pretty easily, if that production rate improves, potentially more than double their user base for Starlink this year. So nice to see that continued progress. And then lastly, just as we look ahead to tomorrow, it's going to be another busy week this week for the macroeconomy. We will have the CPI report tomorrow morning and the PPI report on Wednesday morning, of course, as we head into the Fed meeting next week. So major reports there, which we'll talk about tomorrow. All right, that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Tuesday, March 14th episode of Tesla Daily. Thank you.